Alright everyone, welcome back to the channel for another update on Bitcoin and Ethereum. In today's episode, we're not going to be focusing on the TA, we're going to be looking at on-chain metrics. We're going to be looking at things like whale shadows, we're going to be looking at the outflows of Bitcoin, and we're going to be talking about what are retail traders doing at this moment in time. Are retail traders selling? Are they buying the dip? And then we're going to be moving on to what are whales doing? What are people with a high amount of the Bitcoin supply doing at this moment in time? Looking at what retail's doing, diverging from what the whales are doing, should give us a healthy indication of what is likely to next play out in the crypto markets. With that being said, let's jump right into today's video. So, the only tiny bit of TA I even want to show you is the fact that this green candle right here on Bitcoin and this green candle over here on Ethereum is what crypto Twitter and what crypto YouTube is currently getting out of bed for at this moment in time. I'm seeing people throw themselves out of bed, specifically over on crypto Twitter because I don't watch other crypto YouTubers, but nonetheless I can gauge the market sentiment from what is going over on Twitter. Everyone's now calling for the moon, just like they were calling for the moon back here, but once again we're just solidifying another lower high in the higher time frames and even the lower time frames. This is still a massive lower high. So we don't want to focus on the TA today. We're going to put on our on-chain metric hats and dive into what is going on in the markets. Right off the bat, talking about what whales are doing at this moment in time, you can see I got a whale alert that 17,000 Ethereum, basically over 18 million US dollars, was transferred from an unknown wallet to FTX. Then we subsequently had another whale alert about an hour or so later, about 40 minutes approximately, of another 15,000 Ethereum or 16.5 million US dollars transferred from another unknown wallet over to FTX. Now, there is no, 100% who this is from yet, but it is also interesting to see that Celsius has moved 67,000 Ethereum or 72 million Ethereum or $72 million worth of Ethereum to a wallet that they normally send to before they do liquidate their cryptocurrencies over on exchanges. Now, apparently, this was in order to pay back one of their most recent debts. Obviously, as you can imagine, Celsius is heavily under the water right now, and they are using, some of their reserves, like Ethereum, to pay back some of those debts that they are currently struggling with at this moment in time. But nonetheless, as you can see, whales, or specifically, talking about Celsius, which obviously hold a large amount of Ethereum, so they should be constituted as a whale, they are currently dumping at this moment in time. So as you can see, it's really not whales that are buying the dip right now on Ethereum. There are no whale alerts of whales outflowing Ethereum to their wallets. Otherwise, I would have shown you that, but the whale alerts are basically all sells right now coming from Ethereum. So we're going to be moving on to what whales and retail are doing over on Bitcoin in just one second, but I do want to show you what retail is currently doing at this moment in time for Bitcoin. And for this, we're going to be heading over to Twitter, looking at Glassnode alerts. If you don't already follow them, I definitely recommend that you do follow Glassnode alerts over on Twitter. They do post a lot of really good on-chain information for free. I follow them myself. I do think there is a lot of hidden gems over on here. So what is retail doing at this moment in time? So before we move on with that, we should probably first define what encompasses a regular retail holder. Now, in my opinion, anyone that's got, 10 Bitcoin or less should be considered retail, just because of the magnitude of what makes a whale a whale. A whale, I don't even think you can start considering a whale to be a whale unless they've got more than 100 Bitcoin or more, because then they really can't affect the markets too much, even on high leverage. But nonetheless, what are small retail hands doing right now that hold approximately 0.1 Bitcoin or 10% of an entire Bitcoin? As you can see, the number of addresses holding 0.1 Bitcoins has just reached a new all-time high. There are over 3.6 million addresses holding 0.1 coins, which I would like to differentiate between the short term and the long term. In the short term, I would not say that retail heavily accumulating is a good idea. Why do I say this? Because retail is normally wrong. Let's look at this chart. As you can see, retail starts spiking up, the top is in. Retail starts running up and accumulating, the top is in. They continue to accumulate through the 2014 bear market, which is very interesting. But as you can see, what did retail do? They accumulated all the way up to the top and then they panicked out. So seeing retail run up at this moment in time, in the short term, I would absolutely definitely not say that you should be following the average retail trader. On my channel, I do like to be a contrarian. I myself am a contrarian trader. When I go over on Twitter and start seeing that people are being exceptionally bullish on Bitcoin and Ethereum, and once I see their greed start to ramp up, that's when I start to get fearful, because I like to do the opposite of what the average retail trader does. Once again, most retail traders are normally wrong. If you don't believe me, what was everyone in their nan saying last year? 100,000 Bitcoin, 250,000 Bitcoin. That is what every single retail trader was saying. Even some institutions started saying that, but I imagine they were saying that to make retail traders their exit liquidity. Nonetheless, listening to retail will normally get you wrecked. Following what the whales do is normally a smart idea. So at this moment in time, you can see addresses with 0.1 coins, addresses with, sub 1 Bitcoin. They are accumulating right now. If we look at the addresses holding, approximately 1 Bitcoin, it's rapidly heading up at this moment in time as the price goes down. So what we can see is the price is moving to the downside, and small hands like, people holding less than 1 Bitcoin, people holding less than 0.1 Bitcoin or 0.1 Bitcoin and more, they are currently accumulating right now. And we're going to move on to what whales are doing in a second, but you can also see even the addresses with approximately 10 Bitcoin in, the price is also going down and they are buying the dip. Once again, like I said, I want to differentiate between the short term and the long term. I'm a big fan of decentralization, especially when it comes to Bitcoin, so I much prefer to see addresses with 0.1 coins, addresses with 1 Bitcoin, and addresses with 10 Bitcoin start to accumulate, because I'd much rather the whales with hundreds, if not thousands of Bitcoin, I would much rather they sold onto the open market, got it done with. I would rather we had a change of hands and the average retail trader could come in and buy that Bitcoin for a cheaper price. I am not a fan of big institutions coming in and buying up large amounts of the supply. Like, for example, Michael Saylor recently, I think he holds about 1 in every 160 Bitcoins, and a lot of people really seem to like that. I'm not a fan of that news. I'd much rather it was heavily decentralized, but nonetheless, it is what it is. Let's look at the whale shadows before we do move on to individual wallets containing 100 to 1,000 Bitcoin. So what do the whale shadows show us? They show us, we can show these other data points, but I think it's much more interesting to show addresses that have been holding for 5 years or more. So at this moment in time, you can see the green dotted, the green lines down here. This is the key. You can see 5 to 7 years is the green lines, 7 to 9 years are the pink lines, and 10 plus years worth of hodling are the orange lines. As you can see, most of the whales tend to have these spikes. If we remove the green, you can see it a lot clearer. Most of the whales sell towards the exact top. They take large amounts of profits and then they re-enter the markets at cheaper prices. As you can see, when the bottom are basically in, whether the bottom's in down here or whether the bottom's in down here, you really don't see whales selling too much crypto, and that's because they're in it for the long term. They've got large amounts of capital. They really don't need to worry about waiting another 5 to 10 years in order to make another 2 to 3x. That is what they make in the stock market in like 50 years or something. So as you can tell, the whales, they tend to sell towards the top. As you can see over here, whales selling over the top, whales selling towards the top. But what's going on recently? You are starting to see a decent amount of whale outflows. Now, we do need to definitely put this in perspective, because in terms of the amount of outflows that we have compared to Bitcoin's all-time high, they are obviously being diminished at this moment in time, just like they were being diminished cycle over cycle over cycle. But when we do zoom in to what's been going on in the last couple of months while the price has been moving down, you can see a lot of these wallets that have been holding for 7 years and more have really started to heavily outflow. On on the 29th of March, we had approximately 11,300 Bitcoin outflow from a wallet that was between 7 to 9 years old. You can also see quite recently, if I can line up properly over here, we had 4,270 Bitcoin being sold round about the $29,000 mark on May the 13th. We've got a bunch of these wallets that have been holding for 5 to 7 years. Quite recently on June the 29th, very recently, we had 4,400 Bitcoin being sold. And coming over to the past couple of days, we're getting wallets that were 5 to 7 years old selling, 327 Bitcoin a pop. At the price of 19,270, which is more or less the price that we're currently sitting at this moment in time. We can also look at what wallets are doing between 4 to 5 years, and you can also see, once again, if you do diminish this, you can predominantly see this one's a little bit more picky. If I refresh, it might sort itself out a tiny bit. But what you will notice is the majority of sales tend to happen towards the top. Now, you do have sometimes these major outflows, like up here just towards the start of the bear market. RIP whoever sold that amount of Bitcoin at that price, because they probably definitely regret it at this moment in time. But as a general rule of thumb, you can see the cluster of sales tends to happen towards the top of the market structure. But right now, we're also getting wallets that are 4 to 5 years old, heavily outflowing. Within literally the past 2 weeks, we had a couple of addresses that were between 4 to 5 years old, outflowing 8,676 Bitcoin at 21,500. Obviously, we've moved down about 2,000 since that whale has outflowed, but nonetheless, what we do see with this chart over here is, once again, when we do refresh it, because for some reason when you zoom in, everything gets messed up over here, the general amount of people, of large entities, whales that are selling at these prices are slightly diminishing. You can very much see that we do have a slope if we drew a line of best fit, especially if we get rid of the 4 to 5 year wallets. It's very clear, most of the clusters happen towards the top and they start to trickle down into the bear market when people are less interested in selling. And we're still seeing the same kind of story being played out at this moment in time. Nonetheless, it is very interesting to see that you still do have these massive outflows as we are approaching what a lot of people believe to be the bear market lows. So we talked about, generally speaking, what whales as a whole are doing. Whales specifically that have been holding for more than 4 to 5 years. Specifically, we were focusing on the ones that are 5 to 7 years old, 7 to 9 years old, and 10 years plus. But also, of course, we did talk about the 4 to 5 year wallets, as these definitely do deserve a mention. Now, moving on, we know what retail is doing. We talked about this. Retail is currently accumulating on Bitcoin. The whales are currently selling on Bitcoin. And as you can see, once again, I would have displayed any information I could find about whales accumulating at this moment in time. But predominantly, looking at whale alerts, there's a bunch of different Twitter accounts or whatever that you can follow to get this good information. And nonetheless, almost all of it is whales outflowing Ethereum to different wallets that they're probably going to send to FTX, other exchanges, just like we've got going on here. We've also got Celsius that are selling 67,000 Ethereum, also known as $72 million. And then once again, we've got about another 18 plus about another 17 million being sold over on FTX. So whales are selling Bitcoin and Ethereum at this moment in time. As you can see, what are the retail traders doing? Once again, retail with 0.1 coins, 1 Bitcoin, or 10 Bitcoin, they are currently accumulating. So now this leads us on to our next question. What are the Bitcoin whales doing that are holding wallets with approximately 100 Bitcoin and that are holding wallets with approximately 1,000 Bitcoin or more? So let's start off with the 100 Bitcoin wallets. At this moment in time, you can see, even though the price is moving to the downside, whales have been relatively stagnant, and the number of addresses that are holding more than 100 Bitcoin has basically been sitting at around 16,000. For the longest time now, you can see if we zoom back over to these prices, the Bitcoin price was sitting around about 41,000 when we zoomed into this data point, and the amount of addresses holding more than 100 Bitcoin were only at 16,200. How many addresses are currently holding more than 100 Bitcoin? Well, right now it's 15,900. Let's round it up to make it super easy. So there's only been about 300 whales that have sold a decent amount of their Bitcoin to obviously knock their Bitcoin wallet sizes down a peg. But why is this interesting? Whales are not buying the dip right now. This is what you should take from this. You know, as you can look at this entire run up in this market structure, the whole time Bitcoin was in its nascency phase all the way up to 2018, whales were accumulating like there was no tomorrow. And ever since 2018, the wallet sizes with 100 Bitcoin or more has been diminishing. Now, there's a couple of ways of looking at this, and it's very similar in the wallets that also have 1,000 Bitcoin. But in my opinion, a great way to kind of explain this is the price of Bitcoin is going up, so it's obviously going to be harder to accumulate more than 100 Bitcoin unless you're an absolute millionaire, and there's not a large amount of, well, there's a decent amount, but you know what I mean in terms of percentage. There aren't that many millionaires out there compared to average Joes. So subsequently, the number of addresses that hold more than 100 Bitcoin is obviously going to diminish over time as the price of Bitcoin goes up and people try to take their profits. But what can we take away as the main point from this chart? Even though the price is dipping, whales are not accumulating at this moment in time, and we can see the exact same with the wallet sizes with 1,000 Bitcoin or more. Now, this is a little bit more skewed than we've previously seen. You can actually see that whales have been whales with 1,000 Bitcoin or more have actually been steadily accumulating all the way up to February the 9th of 2021, whereas the wallets with 100 Bitcoin or more, this really started topping out in the beginning of 2017, and it hasn't really returned to that status yet. However, we will see in the future if this does manage to move to the upside. If the Bitcoin price keeps on moving down, I really wouldn't be surprised if we do see this start to pick up again. But once again, what do these whale wallets tell us? Looking at the whale shadows of OG wallets that have been holding for more than 4 to 5 years, 5 to 7, 7 to 9, and 10 plus years, looking at whales that are holding more than 100 Bitcoin, and looking at whales that are holding more than 1,000 Bitcoin, they are not accumulating. In fact, you know, as you can see, the price is going down and they are selling their positions into the market. Whether you want to consider that market manipulation, whether you want to consider that whales taking profit because they don't want to realize as much of a loss, whether you want to consider that as whales are just selling into the open market, potentially shorting in hopes that they can buy back at cheaper prices, it doesn't matter. All of them have the same picture at this moment in time. Whether you're looking at, you know, Ethereum or Bitcoin, we know that retail is buying because the price has been moving up. We're up about 1.5% on the day, which once again really isn't much. I would like to emphasize that this is what a lot of people are getting out of bed for. This over on Bitcoin is what a lot of people are getting out of bed for, but we can see that whales are not buying. Whales are outflowing Bitcoin. Whales are outflowing Ethereum. You know, big whales like Celsius are using Ethereum to pay off their debts. But as you can tell, you know, the average Joe, the average retail trader is diving into these dips like there is no tomorrow, while the whales are constantly selling and waiting for lower price targets. So to wrap up this video, I always say this, I do not think that you should be doing what the average retail trader does. Not financial advice, you can do whatever you want. I just tell you on this channel what I plan to do, and I do not like to listen to the average retail trader. If you listen to the average retail trader in the past couple of years, they would have been telling you since 2017 that Ethereum would have been, you know, $10,000 by now. They would have told you that Ethereum, that Bitcoin would be more than 100,000. The average retail trader in 2017 was telling you in the next year or so XRP would be worth hundreds of dollars, and all of those predictions are completely wrong. When you look at what the average retail trader predicts, they are almost always wrong. And looking at what the whales do, whales seem to get it right. They tend to accumulate up to cycle tops, and they tend to sell off as you do enter these capitulations. Like, I mean, this is a perfect example of this when we look at what happened in the 2013 top. Whales that had more than 1,000 Bitcoin, they started heavily dumping their crypto before it reached its all-time high, and then they started heavily accumulating just before the bottom was in. What does this tell us? This tells us that whales should probably have a better idea of where the price action is going to go than the average retail trader, and subsequently I still do think, based on my TA, which we're not going to deep dive into on this episode, because, you know, I have made a bunch of Bitcoin updates recently, the stock market blues, 12,000 Bitcoin, and also the Bitcoin Action Pact update. Really not too much has changed since these videos. We've, as you can tell, daily time frame, we're really just trending sideways. I don't want to make another TA video and just repeat and regurgitate everything that I already said. So I'll be looking at a couple of different outlets and a couple of different things that we can talk about for Bitcoin and Ethereum, one of them being these on-chain metrics, of course. So once again, retail is buying, whales are selling. I do not think the bottom is in. Nothing has changed. I would also like to highlight the dollar is still exceptionally strong. The stock market is still exceptionally weak, and these markets are both closed at this moment in time. So while crypto may be pumping, nothing has changed in the broader market perspective. The Fed is still hawkish, inflation is still running rampant, interest rates are still getting drastically increased, we're potentially about to enter a recession, and once again, nothing has changed in the economy. This is just a dead cat bounce that normally happens over on the weekends for Bitcoin, Ethereum, and the crypto markets. That's all I've got for you today. I hope you enjoyed today's video. I hope you found some value in today's content, and as always, my friends, Cowboy out. Peace.